Yesterday we covered the South Korea short selling ban. Well, the Korean tech index jumped 12% following that ban until June 2024. Now this is its largest single day gain in history for the index. To put this into perspective, this is similar to the Nasdaq jumping 12% in a single day. So South Korea stocks surged more than 5% for the best session since March of 2020 after this short selling ban. But will other exchanges follow is the question. Well, probably not. In fact, more exchanges may just be implementing short selling with very odd timing coming right after the short selling ban. Philippines to debut short selling for traders after a 27-year wait. Starting on Monday, brokers will be able to lend shares that they don't own to other borrowers once they have their own lending permits. The Philippines is embracing short selling just as regional peers China and South Korea are tightening control over it. So a total of 52 stocks and one exchange traded fund, including all the equities on the benchmark gauge, will be available for short selling on Monday after regulators signed off on a proposal first made by the Philippine Stock Exchange in 1996. So they waited 27 years. Then short selling was banned in South Korea markets, and then regulators signed off to pass it over in the Philippines. Obviously, it's correlated. There's no coincidence here. It's right in front of you. In quotes, without short selling or any index futures, we will be a long-only market. So if there's uncertainty on the economy, the political situation, or even in emerging markets, they will all sell. It seems like they've done just fine for 27 years, but you let me know in the comments down below what you think about this. Risks lie where there is a significant mismatch between assets and liabilities relative to the leverage employed. You literally cannot make this up. Who do you think said this? Ken Griffin of Citadel in an article warning against hedge fund clampdown to curb basis trade risk. Well, guess what? Founder of the $62 billion firm, Citadel, hints out at U.S. proposals to treat big players in an industry like broker-dealer arms of banks. $62 billion firm with $65 billion in securities sold not yet purchased. Yet, in his own words, there are risks between a significant mismatch between assets and liabilities. You literally cannot make this up. As you all know, we recently covered it. A rule that would force large players to register as broker-dealers or government security dealers is among proposed regulations that would subject hedge funds to increased oversight, which was just put through by the SEC. But Ken Griffin, again, is going against Gary Gensler, like usual, basically saying, hey, you guys need to target banks, not hedge funds. Now, hey guys, real quick, I just forgot to ask throughout the entire video. If you enjoy watching or find value out of the video, make sure to hit the like button. It helps me out. Also engage the video. Let's get back to it. We are on the topic of banks right before we jump into AMC. What's happening on the order book, what's happening on the charts, and some additional stuff regarding AMC, GameStop, and the S&P 500. JP Morgan, the name coming up once again, is not doing well. JP Morgan estimated $1.4 billion of potential losses that could be experienced due to credit risk for the third quarter of 2023 alone, also known as provision for credit losses. These provisions for credit losses were reflected by an increase in bad debt, which will likely be written off of $770 million in the third quarter of 2023. Now, I'm not going to read this all to you guys, but the too long didn't read is that the hits keep coming for JP Morgan, America's largest and riskiest bank based on Federal Financial Institutions Examination Council 2020 systematic risk indicators. Observing only net charge-offs, which is bad debt, likely to be written off, JP Morgan has seen an average increase in this metric of 20.1% over the last 4 quarters. Or said it another way, in 1 year's time frame from Q3 2022 to Q3 2023, JP Morgan's bad debt increased 105.9%. So, if JP Morgan's bad debt continued to increase by an average of 20.1% quarter over quarter, by Q3 2024, the bank will report approximately $11.162 billion in total net charge-offs for the time frame. Another year of bad debt increasing by an average of 20.1% quarter over quarter would see JP Morgan reporting approximately $29.773 billion in net charge-offs for the time frame. So you can see how this can get very bad very quickly. And the reason this is so substantial to bring up is like this tweet says, America's largest and riskiest bank. Speaking of what Ken Griffin said, how banks are doing, the South Korean regulator stating that the short selling ban restriction was made to crack down on illegal short selling by global investment banks in particular. So as much as I hate Ken Griffin, he may be slightly onto something that the SEC, the regulators, do have to focus on banks. That doesn't mean that they don't have to focus on hedge funds, but that does mean that they have to do something about these banks. But we know they are all tied together and they got their hands tightly in a knot. Now I want to touch on AMC. Take a look at the order book. We have massive buy orders coming in, 16,000 right here. And then we saw another one for about 40,000 at 10:58 Eastern Standard. And AMC looking pretty good, trading at $11.22, up 4.66% on the day. Broke well above that 10.75 level. This is the clean break I wanted. The next stop is $13.25 on AMC. Watch for a fight fight right around $11.70 once we get up there, hitting that supply zone. But overall, 1325 is where I'm watching on AMC, and I think it comes this week. Plus, volume increase on the break higher will be additional confirmation for that. 3.2 million shares available to borrow on AMC. Call to put ratio, basically no puts expiring in the money compared to 20,000 calls, and more people are betting bullish on the weeks to come. So AMC is doing solid on the chart, on the options chain, on everything else, but they are still dumping short exempts on it. 238,000 for November 3rd, which we saw that little hammer candle, right? They tried to really stop it at resistance at 1075 with all of those short exempts, but we still broke higher. GameStop, to no surprise, going the opposite way like we talked about. $13.70, down 1.23% on the day. Didn't break that 1460 level, didn't invalidate anything. GameStop still looking like it's going to come down to $10.10. 1.7 million shares available to borrow on GameStop. Call to put ratio basically evened out, but more people betting bullish on the weeks to come. But with GameStop selling off, it looks like the puts are just going to go in the money, and then market makers are going to collect your premium on these losses on these call contracts. Plus, take a look at the short exempts. They are keeping it high on GameStop. This is high for GameStop because of how much volume it trades. And before we touch on some additional stuff in the S&P 500 to close out the video, if you guys want up to 16 free stocks, each valued up to $2 grand per stock, use my link, sign up for Moomoo, and make a deposit of any amount to start earning benefits from there. It takes 2 minutes out of your day. Do it as soon as this video is over. The link is in the top of the description and pinned in the top of comments. On top of that, you're getting free level 2 order book data, a customizable earnings calendar, access to trading options going long, going short, and more. And if you're wondering why I like Moomoo, not even because I'm partnered with them, but actually for their notifications. I know it sounds corny, but they send the best notifications. Hey, this stock just reported earnings, or this stock's about to report earnings. Click of a button, tune into the earnings call, look at the comments, people talking about it. Overall, just a solid platform. Also, guys, pop in the Discord. I'm announcing the trading challenge at some point this week. Some additional stuff to come with it. And you got to get in Discord, guys. The Discord link is right under the video and it's pinned in the top of comments. It's $2 a month. If you're not in any Discords, I don't blame you. I used to be the same way, but you will not regret it. Plus, we have options trading alerts in there. We talk stocks all day long, and overall, it's just the best vibes and the most amazing people. Whether you're a beginner or advanced trader, this is the place to go. Now, Morgan Stanley warns this is just another bear market rally. Do you agree or disagree? Well, they may be onto something, as there have been 3 straight quarters that the total U.S. bankruptcy filings have risen, following a decade-plus decline. Well, if this is a bear market rally, this is a big-ass bear market rally. We're trading at 435.42, up 0.17% on the day. Still green, somehow still green. The SPY is fighting that retracement, right? I think the SPY does need a retracement, but according to the Bollinger Bands and the RSI, it doesn't need one until around 439 on the SPY. But I am still in puts for that retracement, not as my main position. I'm willing to lose that money. I'm more so looking for a re-entry into calls because I think the SPY is going to go higher very, very soon. So I'm just watching for that retracement, looking for a re-entry into calls. If you want to know my trades as soon as I take them, or want to talk with me more on these, again, Discord. Overall, guys, that is what I got for you for today's video. Hopefully you enjoyed watching or found value out of the video. Make sure to hit the like button on your way out, subscribe to the channel, have post notifications on, and check the links. I love you all. Lottery Stocks out.